Okay, so we will start with the concept of depreciation, which has already been explained to you. And now let's take the dummy case, which I mentioned. The original cost of the asset was 75 lakhs. The salvage value was 5 lakhs and the number of years was 10, which means the SLM depreciation, if you first take the depreciable value, it is 75 minus 5, which is 70 lakhs. And therefore your annual depreciation is 70 lakhs divided by 10, which is 7 lakh rupees. Right, everyone? Now we will put the years here. So year 1, and I think the useful life is 10. So I will put the useful life here for 10 years. We start with the gross block. Now, please remember the gross block doesn't change. That remains at 75 simply because the gross block is nothing but your original cost, and your original cost never changes. Okay, less accumulated depreciation. Now, what we will do is we will first put the P&L depreciation here. Now, in this case, the annual depreciation is 7 lakh rupees. So there is nothing much. We just need to put 7 lakhs for 10 years here. So I'll just put the annual depreciation here. And it remains this way for all the years because this is straight line method. And straight line method means the depreciation value every year is the same. So this is what goes into your P&L. For your balance sheet extract, your accumulated depreciation for the first year is for the first year is 7 lakh. Next year will be previous year plus the current year. Previous year depreciation plus the current year depreciation. And that we just need to drag. And then if you reduce it, you will get your net block, which is also called as the written down value. And that also we will take for these many years. Okay, and you will see how do you know that your answer is correct? At the end of 10 years, you will see the salvage value of 5 lakh rupees. If you see at the end of 10 years, the salvage value is 5 lakhs, which is what is given in the question, which means this is correct. So what you see in this problem now, highlighted in red is the P&L impact. That is how much depreciation we are charging to the P&L account every year. And below that, the 3 rows, those gross block, accumulated depreciation and net block, this is your balance sheet extract for every year, year 1 to year 10. Now, next we will move to the written down value method of depreciation. So for that, very simple, I am going to just copy the same thing downward. We'll copy the same logic here, but there will be one change rather for WDV. The change is first we have to get the rate of depreciation, which is 1 minus salvage value of 5 lakhs divided by original cost of 75 lakhs to the power of 1 by useful life. Okay. So this is your rate of depreciation, which comes to 23.72%. Did all of you get the same rate of depreciation? 23.72%. Very good. So that is your rate of depreciation. And now we will put the gross block here. Gross block doesn't change. It remains at 75 lakhs, but the depreciation is going to change. So your first year's depreciation will be what? Your gross block multiplied by your rate. This is your first year's depreciation, right? And it is also your accumulated depreciation, isn't it? Now, what about your next year's depreciation? Next year's depreciation will be the written down value of the first year and the first year into the rate. And accumulated depreciation will be previous year depreciation plus the current year depreciation. So यहाँ पे I just need to freeze the rate because that's a static reference. And I just need to drag this to the right. And here also I need to drag this to the right. Now again, what are you seeing at the end of the 10th year? You are seeing a salvage value of 5 lakh rupees, which means your WDV working is also correct. But यहाँ पे if you compare the SLM and the WDV, what do you see? In the straight line method of depreciation, you have equal amounts charged as depreciation from years 1 to 10. That is the useful life of the asset. But in case of WDV, it is higher in the earlier years and it keeps reducing in the subsequent years. That's why you can also validate this using the DB function. The DB is declining balance method. DB. Now the next one is SOYD, which is sum of the years digits method. So for SOYD also, we will copy the same matrix. That doesn't change. And put it down here. But यहाँ पे again, you will have to first take a sum of all the years digits. So the sum of the digits is 55. Is that right, everybody? So यहाँ पे ना, you will have to put down your proportions first. So proportion is 10 by 55, then 9 by 55, 8 by 55, 7 by 55, 6 by 55, 5 by 55, 4 by 55, 3 by 55, 2 by 55, and 1 by 55. Logic क्या है इसका? The logic is very simple. That and when you're accounting for the first year's depreciation, 10 years are left to depreciate. Second year में 9 years are left. Third year में 8 years are left. That way. So we take a proportion of the depreciation based on the sum of the years. It's like a weighted. And remember, what is the value we need to depreciate? 70 lakhs. Because 5 lakhs is your salvage value. तो 70 लाख को हमको इस proportion में बांटना है. All we need to do is check the sum of the proportions. The sum of the proportion should always be equal to 1. अगर वो सही है तो your proportions are right. So your P&L depreciation will be what? Your depreciable surplus of 70 lakhs multiplied by these proportions. And that we will do for all the years. Clear? Now gross block doesn't change. Gross block is remaining at 75 lakhs. Okay, depreciation we have already got. And now again, what are you seeing at the end of the 10th year? Again, you are seeing a salvage value of 5 lakh rupees, which means your SOYD workings are also correct. Clear? So that's how you compute depreciation under the 3 methods. Logically, the red lines here shows your P&L impact, and this is your balance sheet extract. Okay. So that was the video around depreciation.